I'm Scarlett Fu. Welcome to Bloomberg ETF IQ. Now, for every ETF that offers exposure to a theme, it's not long before others promise the same. For a couple of weeks in late summer, cannabis was the place to be. Sam Masucci is CEO of ETF Managers Group, which sponsored the first U.S.-listed marijuana ETF. Before we talk to him, Eric Balchunas is going to give us the drill down into Sam's MJ.
Thank you, Scarlett. Yes, MJ. This is about a year old. It's the Alternative Harvest ETF. It's essentially the first ever pot ETF, and it's actually the world's biggest at $653 million. That's a lot for something that's a year old, and it's a lot for shaky performance. Normally, you only see that kind of money if it's just up, but this has had a more volatile time. It's 75 basis points. That's a little above average, although in the ballpark for a real niche or theme product. Let's really look at what it holds, and the holdings are key here, right? So what are you getting with this pot ETF? You're essentially getting, you notice two things. Tilray, which a lot of people know is U.S., but look, a lot of Canadian holdings in here. 60% of the portfolio is Canada. Also, notice the name pharmaceuticals in a lot of the names of the companies, 60% pharma. But honestly, it's got the most overlap with a global staples ETF, but only 7%. It's got very little overlap with anything out there. It's an unusual product. And also, I asked Ken Shea, in other words, how much do these stocks get revenue from cannabis? It's about 80%. That's pretty good. A lot of these theme ETFs can be lower. Let's look at the performance. It's good times and bad times for this thing. It's had, really nice runs here, and then lately it's come crashing down really since the election. But I do want to notice, look at this sort of separation between the index and the ETF. That's not good. That's a little bit of a red flag. It's underperforming by about 5% year to date. But Scarlett, look, you're the only pot ETF on the market. You trade $50 million a day. Any other little flaws are probably going to be overlooked until there's competition. Yeah, first mover advantage to be sure. Still with me is Sam Masucci of ETF Managers Group. Sam, great to see you.
Thank you, Scarlett.
So the narrative clearly is what entices a lot of people, gets them excited. And of course, one thing we do know, at least here in the U.S., is that the federal government is pretty slow on legalizing marijuana. It's not going to happen in the next 2 years. So the question for me is, where does the growth happen? There's a lot of uncertainty, and you're asking people to sit tight for at least 2 years.
Well, people are investing for the long term. They see the benefit in the only ETF that offers unique access to this new emerging industry, which is medical marijuana. 34 states have approved marijuana to date. 11 of those have allowed for recreational marijuana. And our state, New Jersey, we're in Summit, New Jersey, is really getting close to approving it from a recreational as well. So this is a long-term play, and I think the best way to explain that is, even though there's been significant pullback in the market, the MJ assets have been sticky. In fact, I can say we haven't had one redemption in the last few months. So it's clear that people are investing in this for the long haul and see the growth opportunities globally, because this is a global fund.
Yeah, and I want to go back to that index separation. As an analyst, I can't help but be kind of annoyed by that, because you want the ETF to track the index close. 5–10% is a pretty wide. HMMJ up in Canada actually beats its index by 10% because the SEC lending revenue is so strong. With this new custodian, are they able to do SEC lending? Why is there a gap between the ETF and the index?
Okay, let me start with right now. We are actually outperforming the index for the last quarter by about 30 basis points. There's one reason why we were underperforming the index, and that had to do with the massive fast run-up of Tilray. Tilray ran up, once we just started adding it to the portfolio, 800%. And had we been fully invested in Tilray, it would have been more than 17% of the total portfolio. Canada, by the way, doesn't have to meet the same holding requirements that we do. Now that Tilray has pulled back, we're actually more in line. The fund is more in line, and it's actually a little bit outperforming. From a SEC lending standpoint, I can tell you that our SEC lending program, especially with Wedbush, our new custodian, is extremely successful. And at this point, the SEC lending revenue is greater than the gross management fees. In fact, it's a gross management fee plus 25 basis points or more. So it's been very, very good for the fund.
In our life cycle, we talked about how Innovation Shares is filing a new cannabis ETF. As you await this competition, talk about the investor base. You said you haven't gotten one single redemption, but if you look at your holdings, only 5% of holders are big institutions. Doesn't that make the retail portion of your investor base vulnerable to another ETF where the cost could be lower, or they have figured out the index problem, the index tracking error?
I can't speak to the competition. There's a big difference between filing for a fund and actually launching and having a successful fund. Finding all the third-party service providers, we worked, quite hard and quite long on this. We like the fact that this is primarily a retail fund. Retail before MJ was really investing in small pink sheet stocks, tremendous single stock risk. So we like that. We have that kind of a market breakout.
And as Eric mentioned, there have been concerns about the headlines with MJ changing custodians. There are, of course, other issues if you go farther back as well, a lawsuit, legal dispute over hack as well that your firm sponsored. What do you say to an investor who likes the products that you have, likes the ideas that you guys come up with, but may have some second thoughts about investing with you because of these issues?
I guess that people vote with their feet. So our assets, even with a pullback of more than $600 million in the last few months, is still year over year we're more than double in assets. We have 12 funds, $3.2 billion under management. We are the largest in cannabis. We're first to market in more than 70% of all our offerings. So ETF Managers Group is, has a great following by both advisors, by individual investors, and by institutional investors. So I feel pretty good about our prospects.
Our thanks to ETFMG's Sam Masucci. Great to have you on.